How's it going, everyone? Spencer Israel here with Nick Donato and Brent Slava from the Benzinga newsroom in downtown Detroit. Today we're talking about valuation. Obviously, something that matters to investors, but also that matters a lot to companies themselves. This is especially a hot topic we've seen in the auto industry. As Tesla has come in, there's been a lot of discussion about how Tesla relates to GM and Ford in terms of valuation. Brent, we had some news on that yesterday. First, tell us what happened there.
So yesterday, Ford was surpassed by Tesla as the number 2 player in the U.S. in market cap valuation. A little more perspective on that. So GM right now is sitting at the top of the industry as far as U.S. goes. Valuation of the market cap right now is about $54 billion. Tesla, as I said, surpassed Ford yesterday. It's sitting at $46.8 billion in market cap today, and Ford is about $46.6 billion. So clearly a new player that's emerging in the auto space. That's Tesla.
And then we had a news story today. David Einhorn of Greenlight Capital, big investor, owns about 13 million shares of GM, sent a proposal to the company proposing they split their stock into 2 share classes, one being a more dividend-focused share class, the other being a more growth-oriented play. Nick, you had a chance to speak with both David Einhorn and people at GM. What did they tell you about their proposal?
Yeah, and GM rejected this proposal by Greenlight. One of the things that I've talked with GM in the past is, they're kind of troubled by Tesla's valuation compared to them, based on their own technologies that they're creating here in Detroit. When I reached out to Einhorn, he said, I don't disagree, but they have something that they can do about it today. GM, when I spoke to them, they just did not seem on the same page as Einhorn when it came to the structure of the company. So S&P Global and Moody's also came out in support of GM on this issue. So
it's about increasing valuation here. And Brent, what does this mean for the investor?
For the investor and for the industry, well, a little perspective here. So last year, Tesla sold about 76,000 autos. If we're taking that market cap that we're seeing today and dividing that number, that would get us to a per auto valuation of about $616,000 per value that the market is currently per auto that the market is currently valuing. GM, on the other hand, they sold about 9.8 million autos in 2015. That would place the per auto valuation at about $5,500. So a huge discrepancy there. Something to think about as you're considering this today is that a lot of investors right now are not valuing Tesla based on their auto sales. They're not necessarily valuing it as an auto company at all. They're basing it on some of that technology. They're basing it on the prospects for growth in the future, and definitely Elon Musk, who is the head of Tesla right now.
And for more real-time news and analysis as this and other stories develop, you can stay tuned to our Benzinga Pro platform. Also, new videos every week on Benzinga TV on YouTube. That's it for now. He's Nick, Brent, Spencer. Have a good one.